There are certain industries in the world that have inelastic demand for their products and services. Now, what is inelastic demand? These are products or services that does not have a necessary acceptable substitute. So one particular industry that commands this kind of scenario is actually the medical sciences industry. And in this particular video, I'm going to talk about one company that pivoted a few years ago into this industry and how they are poised to grow in tandem with the growth of this industry. In this video, I'm going to talk about SuperComnet Technologies, or Scomnet for short. I'm going to talk about what do they do as a business, why is it important, some basic financials about the company. I'm also going to talk about basic valuations and also the risks involved if you do decide to invest in this particular company. As a disclaimer, I'm not a licensed fund manager by the Securities Commission of Malaysia, so therefore whatever I say in this particular video is purely my opinion and done for educational purposes only. If you do need license advice, please do seek the help of a licensed fund manager. Also, more importantly, I do not own any Scomnet shares at the point of this recording. So first off, let's understand the nature of the business. SuperComnet Technologies Berhad, the holding company, owns two wholly owned subsidiaries. Supercoma Advanced Cables in Berhad, which is involved in the manufacture of assembly of fuel tanks, wires and cables. I'll show you some of the examples of the products later. And the other wholly owned subsidiary is Supercoma Medical Products in Berhad, which is involved in the manufacture and assembly of medical cables and devices. So how do these products look like actually? So their first subsidiary, which is Supercoma Advanced Cables, they manufacture a lot of these electrical wires and cables, not just for the automotive industry like fuel tanks, fuel gauging and all that kind of thing, but also for the IT and peripheral industries. I mean, you can go and take a look at their website. These are some of the cables that they do: automobile plug-in cables, copper, jumper wires, all this. Very special OEM waterproof connectors as well. Even your commoditized USB, mini USB cables. Okay. Now, where their specialty products actually come in is their medical devices. So these are medical temperature and sound cables. They can be used for your ultrasound machines, your endoscope, and these products generally command a much higher margin because they require a lot of approvals, FDA approvals, CE approvals to actually get their products onto the shelves to be used by medical professionals and practitioners. So why is SuperComnet important to their customers? Now let me give you an example. One day, a doctor is performing an endoscope procedure and stuffing that tube into your esophagus. And all of a sudden, that particular scope starts transmitting gibberish data or not even transmitting data at all. Now, imagine the horror of the practicing doctor or the surgeon trying to figure out what's going on. Therefore, the quality of the product that is being manufactured to perform such conditions must be of very high standard. I think that's one of the reasons why SuperComnet's products are actually important to be manufactured at that certain kind of quality, and that gives them a certain advantage over the competitors. Now, there's no doubt competitors would be able to manufacture similar devices, but due to rigorous testing and acceptance by their clients, I think that gives them a slight advantage against new players that are trying to enter the market. Similarly, for their automotive cable division, now if you're driving a car along the Autobahn in Germany and all of a sudden your speedometer doesn't work because of a faulty cable, now imagine the precariously dangerous scenario that will put the driver in. So I think that's where SuperComnet tries to stand out. I think they consistently try to improve their manufacturing process to avoid such manufacturing defects, as well put in R&D effort to manufacture either cables that are thinner, lighter, more conductive in a way to help their clients either achieve economics of scale by cost reduction as well. So if you ask me why, I think these are some of the main reasons why SuperComnet's business is important to their end customers, the device manufacturers or the automotive manufacturers. So within the medical devices category of their revenue segment generation, they can count Edward Life Sciences as well as Ambu as their two major customers, and it has contributed quite substantially to their rise in production. They're also introducing a new product line, which is the IHS syringe infusion system. It's already gotten approval from the US FDA and already gotten their CE mark, and they're hoping to start in October to manufacture these devices. Whereas the other subsidiary that produces the wire harness and fuel tank, they are now the sole supplier for a European car manufacturer. It augurs well because it's almost like a monopoly. And apart from the 3 existing models that they are supplying to this automotive manufacturer, they're going to start supplying more to another model of the same brand, the same automotive manufacturer, starting in third quarter this year. So it's looking great for Scomnet as of September, the time of this recording of this video. So let's examine Scomnet's financial position. So we start off with the P&L first, or the income statement. From 2013 all the way until 2021, the revenue grew by quite a substantial margin, 26 million all the way to 143 million. For the last 12 months or trailing 12 months, 149 million. Let's look at whether they generated net income for the company. Yes, they did. So you see net income over here, 0.65 million all the way to 21 million as of the last 12 months. Commendable. They probably grew, 30 times. More than 30 times actually. What about cash flow, guys? Cash flow. Remember, cash flow is the lifeline of the blood vein of any business. So under the cash flow from operations, 6.3 million in 2013. They did have some negative years, but they did recover from 2018 onwards. And I think, if I'm not mistaken, 2018 was when they acquired the remaining 75% of their life sciences division. So all the all the revenue and profit generated from that division was no longer an associate, but it was a wholly owned subsidiary already. 75% was bought over to make it 100%. So as of the last 12 months, 33 million cash flow from operations. Wow, commendable, very commendable. How healthy is their balance sheet? Let's take a look. So they have cash and equivalents of 36.9 million. Are they a net cash company? Under this thing called net debt, yes, they are a net cash company because you see it is negative over here. More importantly is this: you want to check out whether the cash was actually derived organically through the operations of the business, or did they raise any money through rights, capital issuance, through stock. So let's check. Under common stock, you see, that's quite a substantial increase in their stocks from 24 million all the way until 200. So it's almost 10 times from 2013. So let's plot this out against their cash. And you will see that, yeah, it does somewhat correspond. So why I'm showing this is, whenever you see a net cash company, it doesn't necessarily mean the cash was generated from the operations of the business. Sometimes it may be through raising of capital by tapping the capital markets. And one example I've just shown you is that they issue more common stock, and therefore that's why they had cash. So just be wary. Not to say all companies do this, but just be wary whenever they tell you they're net cash. Try to find out whether it was cash flow generated from operations or whether they tapped into the capital markets to actually raise more money. But overall, I think in terms of financial health, this company looks very, very stable, very good. I think more importantly is you have to try to figure out what is their next phase of growth. Look at earnings consensus from the analysts, what roughly will be their target profit for this year, and therefore it is a good segue to the valuations. So let's look at Scomnet's valuation at this point. If we look at the price against the normalized earnings, you see actually is trading at a little bit of a premium, 35.9 or roughly 36 times. However, if you look at the EV against the EBITDA, which is at 19.07, you notice that it commands a slightly lower valuation. I think why this is the case is because EV takes into account the cash of the company and the debt of the company, whereas market cap doesn't take into account that, and therefore on the PE side it looks a little bit high because it's using market cap on the price. Whereas an EV, it actually takes into account both the debt as well as the cash. So it doesn't look that high on an EV EBIT basis. Earlier I mentioned that it is in a net cash position, so that probably explains why. These are the two parameters that we should look at. Obviously, as a manufacturer, it's also quite easy to build a DCF model, which I'm not going to do today. But these are the two quick and simple guidelines on valuation that you can use to evaluate Scomnet. So while everything looks prim and rosy for Scomnet in the earlier part of the video, I do need to highlight certain risks that as an investor you should be aware of. The COVID-19 pandemic actually exposed an Achilles heel within the global trade system, and I'm talking about the logistics, infrastructure and value chain. Now, a lot of the materials that Scomnet actually uses to manufacture are actually through shipping routes. And shipping freight rates have been just going up. It has not been kind to anybody doing business, and Scomnet has not been spared. More importantly is also, even if you're willing to pay higher shipping rates, there's also a risk of delays, and that actually has a ripple effect towards the manufacturing of the finished products that Scomnet is trying to produce for its customers. So definitely the global supply chain is a key risk that Scomnet has to manage. Second risk that I think of is actually the foreign exchange exposure, but Scomnet has a lucky star in the sense that their products are mainly priced in the US dollar, and even though their raw materials are also priced in US dollar, it becomes like a natural hedge that nets out against each other. So that's a risk kind of like taken care by itself. The third risk that I can think of is actually their technical know-how and their people being poached away into their competitors' companies and all that. And I think that's where management is key in trying to retain all this R&D that has been spent to develop the manufacturing know-how, the R&D to actually engineer these products. So it's a risk that any company faces, but I think that's where management is key on talent retention and to just lessen the attrition rate. Last but not least is actually the supply of raw materials. A lot of the raw materials that Scomnet is using, or Scomnet, copper, stainless steel, all these commodities have just seen a commodities boom because of the disruption in both the logistics supply chain as well as the increased demand because of COVID as well. Especially in the medical devices, I mean, more and more people are medically aware, health aware, and they are conducting more checks, and therefore the demand for all this is rising. Couple that with automotive demand, now people are going back to work, people want to be more mobile. There is a rising demand for automotive, especially EV cars as well. So you see, there's got a lot of domino effects to raw material prices because of supply and demand. So these are the four main risks that I think Scomnet has to face, and as an investor you may want to be vigilant about them as well. So there you go, a concise overview about Scomnet, their business model, their financial statements, their valuations, as well as the risks that you need to consider before you want to invest in this company. Hopefully this builds your encyclopedia of business model frameworks and has brought value to you in your investing journey. If you have enjoyed this video, please consider subscribing to my channel, give it a like, share it with your friends and family, and hopefully we build a better investing community in Malaysia as well as the world. See you guys. Bye bye.